Hello and a very warm welcome. Finance Minister Nirmala Sitharaman all set to present the vote on account. The government going all out to keep expectations real. Last time, just before the elections, when Interim Finance Minister Piyush Goyal had presented the interim budget, he'd gone all out, laying out the populist red carpet to try and win voters. This time, the Prime Minister and the Finance Minister trying to keep the bar of expectations low. What we'll do on this special edition of the news track is to try and get a sense of the mood amongst the voters, amongst citizens when it comes to the Indian economy. What are people expecting from this budget? And to help me decode these numbers, I'm joined by a very sharp panel of those who understand economic numbers and budget making. I want to welcome first Subhash Garg. Mr. Garg has made several budgets, understands the commas and full stops better than most. Thank you very much, sir, for joining us. Terrific to have you with us. Dr. Rajiv Kumar joins us, headed up the Niti Aayog, one of our sharpest economists. So welcome. Thank you for being here. Supriya Shrineth is here. She's covered many budgets in her capacity as a business journalist, now waiting, itching to tear the budget numbers apart. Zafar Islam joins us. He's been a banker in the BJP and understands budget making. With us also is Yashwant Deshmukh, whose team at Sea Voter led the exercise of trying to get a sense of the economic review from the lens of the Indian voter. The government did its own economic review. We'll see how the voters are looking at the current state of the Indian economy. So let me take question number one on our screen right now. Has the centre delivered on the economic front? This was the question posed by the Sea Voter team. Here are the responses. And what we've done to try and make this easier for you to decode is going back 5 years. You can look at numbers starting from 2020. Better than expected, say 40% of the respondents. In 2020, it was 34%. 21, it was 30%. Remember, that's also when the pandemic happened. Just as expected, say 25%. Earlier, it was 16% in 2020, so it's gone up a little bit more. Worse than expected is now at 35%. In 2020, it was at 50%. In 21, it was at 40%. So what this shows broadly is those who think the economy is doing better than expected as a percentage have gone up. Those who think the economy is doing worse than expected as a percentage has come down. But remember, the base here are the years of the pandemic, and therefore that's when expectations were really low in terms of how the government was actually performing. So with that, let me get our first word in from Rajiv Kumar. Dr. Kumar, this first set of data suggests that people aren't delighted with the way the economy is, but they aren't particularly disappointed either. They think it's going just the kind of way they'd like it to, or they would have imagined that it would.
I think this data reflects the reality, and I said this earlier in the earlier show, which is that most people, the large sort of mass of common people believe that this government is working and working for their benefit. And that's happened because of several things that the government has done, and principally amongst them I would count the direct benefit transfers, the sort of scheme that the government has announced, and the fact that, it is reaching food to the 800 million people, etc., etc. Now, and the fact that the government, I think the people recognize the fact that despite the global uncertainty and despite the pandemic, the government is back on track. And I think that's what's reflected in this data.
Back on track and doing better than the rest of the world. Because remember, economic performance is always relative. The International Monetary Fund in its global macroeconomic outlook that came out this week has actually revised upwards India's economic growth and has a bullish outlook on India's growth next year as well. Supriya Shrineth, there were various things that happened during this term of the Modi government where the government could have botched up spectacularly, and a lot of international governments did. The Modi government, to its credit, seems to have kept an even keel, and at this time seems poised for a takeoff. That's what the data seems to be suggesting. What you, as an opposition leader, make of the economic performance of the current government?
I don't just think as an opposition leader, as somebody who tracks the Indian economy very closely, and I'm going to wear both hats intermittently, but I find it very amusing, and I find it amusing that you say that the government could have botched up. The government has botched up. If 10,000 people in Haryana are queuing up to go to war zone for jobs, that is a botch up. If 3,000 children line up outside Pune, Hinjanwadi for that one IT job, that is a botch up. If consumption has crashed from 7.5% to 4.4%, which is 2/3 of the Indian GDP, that is a botch up. If rural
but some
wages...
of this is always the case in a country
No, let me finish. No, it is not. No, it is not. A demand dip Hindustan Unilever, somebody like you who also looks at business today, ask your editors there. Hindustan Unilever, which is a yardstick, which is the bellwether as far as consumption is concerned, is reporting negative sales growth, very, very muted profits. Why is that happening? Because demand is down. Now, if the economy was on a cruise, if the economy was doing well, why would demand dip? If the economy was well, why would joblessness be an issue? The reality is that whether it's consumption, whether it's joblessness, or even investment for that matter, is the government Achilles heel. The private investment is not happening. It's still below 30%. The gross fixed capital formation, the number that we track, it's still below 30%. The government's engine is spending, but I don't think for how long can that chug along completely. And I will just end by saying there are 4 blocks to any GDP, any economy that you track: consumption, investment, exports, and investment, as far as government investment. There is only one engine that's chugging along. How long will that continue? I think is the big question. Our exports are sputtering. FDI is down to a 16-year low. I mean, if everything was hunky-dory and all our policies was in great shape, why is FDI down? Why is the rupee crashing to 84? I think these are things that we have to look beyond the rhetoric.
Let Zafar Islam respond to the charge that there was a meeting recently of industry representatives and the finance minister where she actually made the same point that private industry needs to do more in terms of investment. A lot of India's growth is actually coming from government investment in public infrastructure projects, which beyond a point cannot be the only engine firing the economy. Are you disappointed with the fact that despite the fact that corporate tax rates have been brought down and tax collections are up, we still aren't in a situation where India Inc. is investing the way the government thinks they ought to?
Rahul, we really need to understand and with it little bit till 2012 and all, and do a back testing. We had excess capacity because money was freely available. All the industries were actually being set up by many of the businesses houses without doing any proper project evaluation. So most of the projects which they had actually put in at that time became NPAs. So we had inherited a problem of NPAs. Bank was not in a position to lend, and excess capacity was the another problem we were facing. Now we are in a position where bank is in a very sound position. Banks is in a position to lend, and they are lending. The lending rate has gone up, and the excess capacity in the system has also come off. Now there is a capacity utilization is around 75-76%.
No, but it's been in the mid-70s for very long.
No.
And at some point in time, a virtuous investment cycle is supposed to kick off, which everyone's been waiting for.
Rahul, you have to understand, you need to have growth capital. Growth capital comes from the equity as well as the bank loan. Bank was not in a position to lend. How do you, even if you have some surplus cash on your balance sheet, you will not be able to invest because you need debt from the banking segment, which was not coming. Now in a position to that private sectors are evaluating projects, they are investing, they are putting new projects, and you will see that a lot more projects will come up.
Subhash,
because
if you were involved in the process of building this budget, would you be entering the exercise feeling optimistic? Or because some of the concerns we had when you were with us last year in terms of private investment not kicking off, and Rajiv Kumar was there as well, those concerns still persist. Now this investment cycle that Zafar is speaking about, everyone, including those in government, have been waiting for this cycle. It's almost as if, kab aayenge ye din?
See, that's true. The government has done very well to keep the investment going by putting the public investment. The private investment has practically collapsed.
Why?
Why? The private investment happens when they see profit at the end of it. No one does investment for the sake of
No, but
charity.
the point that Zafar makes, that capacity utilization is now in its mid-70s, which is when, at least academically and theoretically, an investment cycle for the next 10 years should begin.
So, Rahul, this is basically talking about the manufacturing industrial economy. That is already matured. The new investment is going into the digital economy, the environmental economy, the infrastructure economy. That is where the new investment. And it is the new enterprises, the startups of the world, those kind of things. That is what is sustained by the foreign investment, foreign technology transfer, bank loans.
So you think that doesn't require this kind of investment?
No, it's actually in the reverse. Now you see the startup. We were doing very well until 2 years back. The startup story is busting now. There is more
No,
startups.
but that's not the government's fault.
No, you are asking me about the private sector.
Sure, sure.
That is the private sector. That is the private sector. Why would they invest? Because they were looking at the animal spirits that let us raise our volume.
And getting carried away and flying in
And
the air.
they got
No, but
carried
Rajiv
away.
Kumar, what do you make of this
Always they
point that
got
Dr.
away.
Garg is making, that private investment is down because private India Inc. is not seeing profits in the future, which is why they're not seeing the need to invest.
Rahul, I'm afraid, with due respect, private investment is not down. It's not increasing as rapidly as it can be.
Sure, that's right.
FY21, the private, this is the review of economy that's just been put out, was 3.7 trillion rupees, and now in FY23 it's 5.9 trillion rupees. Right, so it's gone up. The bank credit it went down to 2%, the increase in bank credit annual. The non-food bank credit, now it's up to 19%. Yes, it was 25, 26% at a time of the exuberance in the 2008 to 2012 period, which resulted in the balance sheet weakness that you had. But that bank credit is now going up. So therefore it's beginning to happen. What I have, and I've said this to the highest authorities, as it were, is that the second leg of the K-shape, the small and medium enterprises, they are not doing as well as they should have been doing, and that's something that requires attention.
There is not doomsday the way Supriya has predicted. Yes,
I just want to
it's
make
not
a small point.
The bank credit is going up, which is true, because personal loans and the services are going up. But the industrial credit is very much down. It is
it's
just
not down.
From 43% in 2014 of the total credit, the industrial credit is 26% now.
Yeah, but the rest of it is going to housing, which generates a lot of jobs.
I think the small point that is to be made here is, while we talk about investment, who invests? Investment is an act of faith, whether it is your domestic industry or the international operators who come. Your FDI being at a 16-year low, consistently going down for the last 3 years, should raise red flags. Because guess what? People are engaging more with agriculture. Jobs in services are going down. Jobs in manufacturing have gone down. I think these are reasons to be concerned about. Why? Because I do believe, A, unpredictable policy framework, and I also feel the social
but what is
environment.
unpredictable? There's been quite a lot of predictability.
Really?
In which part do you see unpredictability? I mean, retrospective taxation on your watch by Pranab Mukherjee as Finance Minister.
Absolutely.
That is a case of unpredictable policy
but
making.
GFCF was still much higher for us than it is for Mr. Modi or his government.
No,
in
but
the
where
last
are you
time
seeing
finished.
unpredictable
I will tell you where I'm
policy
seeing
making.
unpredictable policy. When people want to invest, they want to see law and order. They want to see a safe working environment. They want to see peace. They want to see economy. I think it is all. No, 1 second, you cannot right now. I'm still speaking. I think it is all playing in. Why is Indian industry, which sings peals of Mr. Modi, not putting money where its mouth is? No, 1 second. And I just want to say one small thing. Does anybody care about the fact that services, the jobs in services are going down and the government wants to lose no sleep over it? And with all due respect to bank credit and with all due respect to everything, the reality is that corporate India was still being given kid glove treatment. You still gave them corporate tax exemption. You still wrote off 14.5 lakh crore rupees. They're still not investing. I think that's a serious cause of concern. They don't believe you.
Zafar respond.
Small point.
I heard her, and she was talking about various FMCG companies. Their top line has come off, profitability has come down, because they had monopoly. There is no more monopoly today of Britannia or other companies you have mentioned, because you have likes of Patanjali. See their top line, see their bottom line. They have done
Patanjali
exceedingly.
isn't growing any longer in the way
they are eating their market share. HUL is the biggest competition is from Patanjali. See the kind of turnover there. Secondly, no, let me just listen. Let me just complete. She is talking about the FDI. In last 10 years of UPA, 10 years of UPA and last 10 years of NDA. Just see the number of how much FDI we have been able to attract. They could attract. Let me just complete. Why you are interrupting? You have no patience. They could attract only $250 billion. We are almost going towards $1 trillion.
Why is it going down
No,
the last 3 years?
$1 trillion,
Now
$1
we're at
trillion
16-year-old.
purely because she was talking about predictability, because people are comfortable.
Okay.
Last year of government, always
They're so comfortable, they don't want to invest, they don't want to consume.
Last year of
comfort in
election
the
year,
economy.
every investor wait and wait for the election to get over, and then will they
That's
reinvest it?
also
Okay,
Victor, I said
Rajiv
that's
Kumar.
also
Well, once
foreign
again, no,
investment.
the fact is that there is consumption that's happening. Make no mistake, but it's
One second.
consumption amongst
No,
the
consumption
creamy
is
layer.
down.
Consumption
Absolutely.
amongst
Luxury
the
consumption
creamy
is
layer.
happening.
Those who are rich are feeling rich and they're going out and spending. Those who are poor aren't spending quite as much, and that's a very big problem.
Second, I just want to put this FDI question at rest. And I said this in the last show as well. The FDI is down because the global uncertainty is huge. The US interest rates had been going up and the money is flowing back there. And the clinching data for that is that the share of India's share in global FDI flows was 2.3% in FY17. And now it's 4.3% in FY23.
That's a good point. And also the fact that
and the share is gone.
And I'll tell you why.
16
Because
once
the
again, I want to
share
go
of
across
China has also gone down. That investment should have ideally come to us. It has not
I want to go
come.
across to Yashwant
Exactly.
Deshmukh
Our share
for
has
two
gone
points.
up.
Our share has gone
The
up.
IMF data that came out says that 16% of global growth this year, all the growth that happens in the world, 16% of that is coming from the India engine. Yes, of course, things can be much better, but let's not disparage the way things are as well. I want to take two questions. What is the expectation that people have for their own quality of life this year and next? Okay, so the quality of Aam Aadmi's life last year, has it improved? Is it the same? Has it gotten worse? So 35% of the respondents in Yashwant's data say that it's improved. This was 39% earlier, so that's actually tending downwards from the beginning of the government. Is the same is about 30%, and has got worse is now at 35%. So those who think that things are worse is actually coming down, because that was earlier at 49%, 42%, 45%. So it's actually come down to 35. But Yashwant, the fact also is that at the beginning of this government's term, we went into the pandemic, and therefore, if you compare from where the government started to now, it seems that the outlook is generally more positive than it was 5 years ago.
Exactly, Rahul, and that's the fact that pandemic was a black swan event. I mean, from all parameters, and somehow the numbers, if you take the standalone numbers as on today and do not look into the timeline, you will look into the distress signals and you will read the data in a different way. But if you look at the timeline and you see that people are actually comparing their situation a couple of years back during the pandemic years, right after the second wave and so on and so forth. And this is where you realize that actually the data is coming down to pre-pandemic emotion or sentiment in that way. So that doesn't mean there is no distress. That doesn't mean people are not complaining that there are no problem. That doesn't mean people are not saying that they have a problem in running their kitchen. But at the same time, same set of respondents are also appreciating the fact they are just out of the pandemic. They are somehow appreciating the government, the way they are handling the things, and the optimism level is high. So there are both the things. Number one, distress signals are there. People are complaining. Big number of people are complaining. It is difficult to manage their kitchen, difficult to manage their day-to-day budget. But at the same time, the optimism and hope index is high that things will get better from here.
Now, so let me run that question, in fact, the question about how people view the next year. Are they confident that next year will be better or worse? Here it is. What's your understanding of the quality of the common man's life next year? Will improve, say, 42%, but keep in mind that earlier, 58% in 2020 and 67% in 21 thought life in the year to come would be better, okay? So now will be the same is about 31%. 31% say it will be the same. In 2018, it was 14%. In 2019, it is 17%. Now that's 31%. So will be the same is 31%. And will deteriorate is 28%. In 2018, it was about 28%. So it's kind of just there. How would you be reading this data, Yashwant? The fact that the level of, you can call it exuberance or optimism, is more muted, but it's not as if it's gloom and doom either.
Exactly. That's how I read it. That, there is optimism. It is a bit of muted in that way because still the inflation issues are bothering them. Having said that, there is also data in the timeline, Rahul, which has to be seen before this term of 2019 to 24 and starting that data in 2013. That will give the context, in that way. Almost 8 out of 10 back in 2013 poll were saying a negative sentiment, saying that they are not really hopeful. Basically, when you look into the data of 2013 and compare to post-pandemic data, it is eye-opener, Rahul, that the way people used to express the hopelessness in 2013-14 time and the post-pandemic time are almost on the same level. That is what explains actually, Rahul, that why exactly these distressing numbers are not really turning into a political disaster for the BJP at this point of time. Simply because people are not only comparing it with the situation post-pandemic, they are also comparing it 10 years back. Somehow this is a long-term trend line, and this trend line is giving the hope or the positive emotion for the respondent. And I guess that more than
okay, you make an important point. Let Supriya respond to it, because when you look at the data and the economic situation in our country, bear in mind that there is a war between Russia and Ukraine that goes on. There is a massive crisis in the Middle East which is potentially escalating. In China, the economy is in a black hole. Evergrande, one of their biggest real estate companies, has gone bust. And therefore, when you look at this data, Supriya, you have to bear what Rajiv Kumar was saying, that all this is happening at a time of immense geopolitical uncertainty.
And geopolitical uncertainty has been a part of Indian economy and Indian life since we coupled with the world. So this is nothing new.
No, but we're doing better than the rest of the world. Can I just call one second? Let me call that IMF data on the screen, which looks at
I want to
the projection for India.
Please speak on this data, because I think your reading of this data is incorrect. You said the number of people who believe their condition is going to deteriorate next year has gone up from 25 to 28%. People who said will remain the same from 14%, it has gone to 31%. So there is more doom. Lesser people believe it's going to significantly improve. If things are so hunky-dory, more and more people will believe their condition is going to improve, but more and more people don't believe that.
No, but you're clutching at straws.
I am not clutching at straws.
25 to 28 is not gloom doom.
No, I'm not.
It is okay. It is concerning, but it's not doom.
It's about how you read the data.
Yeah, it's about how you read the data.
You read the data and you said everything is hunky-dory, there's exuberance.
42%, one second, come on.
There is no exuberance.
Listen, I read statistics, so don't argue with me on this.
No, I will argue with you because I understand statistics.
4 out of 10 people are telling you that they think their quality of life will be better. That signifies no, that's at this, not from the pandemic, not from the pandemic. At this moment, when asked about outlook for next year, 4 out of 10 respondents are saying that they think their economic outlook will be better. Now you're saying forget the numbers. Now the numbers don't suit you. You're saying forget the numbers.
Because the problem is that you're trying to outshout me.
I'm not
Don't outshout me. Let me talk.
Go on.
Please don't interfere. Just like you gave everybody
go on.
a monologue, give me a 30-second
go on,
monologue as well. The problem with the data that you're putting out is you are selectively reading it. If there are more people in the economy, almost over half, actually 2/3 of people believe their condition will either be the same or will deteriorate, I think it's gloom. I mean, where is the exuberance? 6 out of those 10 people are saying, "Meri condition ya to aisi rahegi, ya aur kharab ho jayegi." I don't know. I think that's selective reading of the data. But let me just make one important point here. We were discussing the Indian economy. We were discussing the MSMEs. The share of the MSMEs in global exports used to be, in our exports, used to be 50%. It's gone down to 44%. Share of MSMEs in GDP has significantly gone down. About 30,000 MSMEs have shut down in the last 3 years. Which economy are we referring to? Are we only talking about that K that went up, and are we not going to talk about the K that went down?
I just want to put this in context and call up on the screen the IMF outlook for the Indian economy and some of the other peer economies internationally. That will give you a sense.
Let's talk about the ILO data. The ILO data says
ultimately
wages are going
how
down.
India performs is relative to what's happening elsewhere. So the US economy projected to grow at 1.6% this year. In the Eurozone,
it's a $22 trillion economy.
0.5%. Germany, negative 0.3%. France, 0.8%. Japan, 1%. UK, 0.5%. India, 6.7% for this year and 6.5% for next year. Look at China, for example, 5.2% on a much bigger base, make no mistake. Russia, 3.0%. Brazil, 3.1%. Mexico, 3.4%. So the fact is, Rajiv Kumar, that the Indian economy, relative to how the other big economies are growing, is one of the strongest points of growth for the global engine.
Yeah, I mean, it's clear that the Indian economy is doing much better than the others, and that's because I think our domestic demand and our, whatever we might say about the consumption and investment, both are the strong pillars here. And it is going to be the fastest economy. But I've also said, Rahul, very often that we should not be complacent at 6.5.
Oh, sure, of course.
We need a much higher growth rate.
Now, respond to the point that Supriya would make, that your promise was double digit, right? Relative to that, if you say you're settling now at 6.5, 6.7 and are wanting credit for it, that's not fair. You promised double digit, you're far from delivering that.
Rahul, first of all, you had shown this earlier slide, about the global economy, how the global economy is performing. India is contributing almost 17-18% of incremental growth, global growth. That itself suggests that Indian economy is the engine for global growth right now. Secondly, before pandemic, we definitely have expectations, but we had seen 2 wars, we have seen pandemic, yet our economy is much better than compared to any other economy in the world. Secondly, what is more important, in terms of the expectation and exuberance and people's expectation from the government, I think this is the best ever time in the history of independent India where people have confidence in the government, people have confidence in the leadership, people have confidence is from the party who can deliver to their expectation, and their welfare scheme is being run. They are the beneficiary of the welfare scheme, and they feel that there is a government who can deliver to their door everything what has been promised by them and not being delivered, but now is being delivered to them. Just stop. Let me just complete. I have never interrupted you. So people's expectation. That's why we say no. We say that we will definitely improve our number of seats. We will win this year from 2019 purely because of what we have delivered to the people and their expectations of people's confidence in our relationship.
Dr. Kumar says here, and if Zafar Islam says everything is hunky-dory, he believes the 2 important pillars, consumption and investment, are very robust. I have given you statistics where consumption is collapsed. I'm giving you statistics where gross fixed capital formation is still under 30%. So, I mean, which numbers are you basing your optimism on? Which numbers are you basing your arguments on? Because there certainly seem to be a number that either it is not being tracked or a number that is not in the public domain. So, with all due respect to your economic prowess and to his political prowess right here.
Consumption as percentage of GDP was 58%, 58.2 in the pre-pandemic years. Is now gone up to 62. It's increased. You see the data.
Sir, the pace of growth. There is a reason why rural wages are going down. You want to quote the IMF? Look at the ILO report on wages.
The rate of
Indian wages are consistently muted. I mean, you want to track data? Let's track all data then. You cannot be selective about data.
Make a point. Yes.
Growth is fine. We are making 16% share of the global. That's what we're contributing. But let us keep the perspective a little longer. For 5 years of the current government, what is our average growth rate? It is only 4.3%.
So instead of pandemic, you had wars.
Whatever.
It's a once-in-a-century event.
No, but you can't forget the period. Earlier period, there was global financial crisis.
2008, there was
Always
economic
there would be
depression.
something or the other. But we shouldn't be blindsided by an year or 2 years performance, because that is where we need to go a long haul. We don't have a short period.
This crisis to hoti rehti hai.
Crisis hoti rehti, but the kind of global uncertainty and global crisis that you've seen in the last 5 years, the wars and the pandemic and the fear of recession in the US, what's happening, the hyperinflation in Europe and US, all of that.
And 2013 taper tantrum.
I think Surjit Bhalla has written a very good piece on that. That if you discount for that, he and Karan Basin, if you discount for the global economies, in some sense collapse, then the India's 4.3 or whatever the rate is actually quite comparable to what has happened before.
How much are we going to ring fence the government? The reality is there was a 2008 economic crisis, there was a 2013 taper tantrum. What are we talking about here? And the reality also is the war that is happening in Russia and Ukraine gives us the elbow room to rein in our inflation.
There is a difference. That economic crisis was in the United States where Lehman Brothers
and it impacted us.
The pandemic is a one-in-a-century crisis which impacted
How much are we going to ring fence the government?
If you equate both, then perhaps you do not understand.
How are we going to do for the government?
If you are equating pandemic with, if you are equating pandemic with global financial crisis of 2008.
We were the worst performers economically in the pandemic. At least accept that. We went
whatever
down
it is, whatever 20% of the world population lives there, and there was no business, there was no economic activity. But from there, from the gloom of those days, we have come out and we are doing exceedingly well.
From that tracker data that we are seeing, your personal income in the last 1 year. How's your personal situation been? Your income up, expenditure up, say 28%. That's where you really want. Your income's going up, your expenditure is going up, sab changa si, 28%. Income is the same, expenditure up. So income hasn't grown, but expenditure up 45%. That's of concern. Income down, expenditure up is of even greater concern. That's 18%, 2 out of 10. Income up, expenditure down, that's very difficult, right? 4%, income down, expenditure same, 3%. Income and expenditure the same, 2%. So the key concern there is, Yashwant, income is the same, expenditure is up. That's the number which got the maximum responses at 45%. That's half your sample says their income is kind of the same, but expenditure has gone up. That's not very positive there.
Same or low.
Yashwant Deshmukh.
If you will add the 18% to that, you will get down to almost 60%, Rahul. That is 60% household are saying income is either same or down, but the expenditure. Basically, they have a problem of matching their income and expenditure in that way. More than 1 in 4 households are actually comfortable, I would say. If you will add up the 4% on that side, it will become 1/3. Approximately every third household is like kind of on the upper income skew, upper middle class skew, where they are probably looking at a positive economy cycle. But 60% households, and that's a huge number in the bottom of the pyramid, Rahul, who are concerned, if I may say the least. This concern is the glass half full or glass half empty. Supriya is actually very correct when from the opposition leader's perspective, she will look into the data. She will absolutely say that this is a glass half empty scenario, more than glass half empty scenario. From the BJP side, probably the only clinch that they are having, the thing that they have to clutch on, that why exactly this scenario is not translating into political distress the way it translated in 2013 and 14. And the key answer to that, Rahul, is that when we were doing, if you pull out the Mood of the Nation India Today cover that we did in 2013 August and 2014 January, the top of the mind issues or the crisis in front of the people at that point of time were not just inflation and unemployment, but the top of the mind was corruption. Now, that I know is a touchy figure, because when people figure out, or when people start blaming some government for their problems, that is where the distress signal turn into a political.
How concerning are these numbers? Right, the fact that people either see their income being the same or having come down while the expenditure is going up, that suggests quite a bit of concern there.
Pay attention to the other one. Income up, expenditure down is only 4%.
No, but that's just human psychology.
No,
also.
because income is going up typically. Yeah, so this actually summarizes to my mind the real state of mind, that there is a very large section of the people who are feeling more distressed than what they are. The scenario upper, the big show, that appears to be very rosy.
This is where Supriya gets to say, I told you so.
No, I'm not going to say I told you so. I feel very bad about my fellow brethren. I feel very bad about 2/3 of the people who polled here who believe that they are in distress, who believe their income has either stayed the same or has gone down and expenditure has gone up. And which is why I keep saying, are we going to cater through this budget the people who are saying my income is the same, but my expenditure has actually gone down, which is the richy rich club? Or are we going to talk about the Indians who don't have a manufacturing job, who don't have a services job? 15.4 crore people enrolling for Maganrega is a huge cause of concern. Does anybody realize that?
Islam.
Because these are the people who've lost their jobs in cities and some jobs in the rural areas, and they're forced to do agricultural labor.
Staying the same or going down while expenditure going up. That's what a government wants to avoid, and 63% are falling in that category.
I think, Rahul, you have to really analyze it properly. Then you will understand that it is very temporary, primarily because of the inflation, because of Ukraine crisis, because of a global problem with the global disruption in global chain, supply chain. Because of that, inflation had gone up. Partly because of that, people must be feeling that their expenditure has gone up and income has not, to that extent, has gone up their income. But if you really want to understand the satisfactory level of the people, that they are satisfied with their income and the expenditure and the government, I'm sure the number will be much steeper for
Okay,
in terms of
let
the
me take that
level of
question on
satisfaction
current
for the
expenses versus last year's. Let's take a look at the responses that Yashwant and the Sea Voter team picked up on this. Gone up but manageable. Okay, so expenses are up but we can manage is 33%. That's 3 in 10. It's getting difficult to manage, say 62%. Expenses gone down are only 5%. 62%, which tallies with the last question, saying that the situation is getting difficult to manage. Rajiv Kumar, your interpretation of this data, 62% saying expenses are
Rahul,
getting tough to manage.
Both this slide and the previous one, I think should attract policy attention. And I think the policy...
What would you be, if you were in the Niti Aayog, what would you be recommending?
I would do that you should set employment generation as the principal target for
No, but
my
it is,
budget.
but it's much easier said than done.
But the point is that there are, for example, let's say that a whole slew of policies to expand exports and really ramp up that, because all exports are...
Give us specifics.
Specific meaning...
What do you think should be done in the budget?
Those are, you have to identify the sectors which are our strength and then give them the kind of incentive that you need to actually ramp them up. Let me make a general point here, not specific, is that the income consumption balance will improve only with employment generation. And employment generation will become the principal focus of the government's policies in the coming budget, this one and maybe the other one.
So she's...
Can I make a small point here?
Dr. Garg, what would you suggest be done to try and address some of these concerns about 62% of the respondents saying expenses are getting difficult to manage?
See, this is very clear. This is also brought out in the larger data. The profit share is going up, the wages share is going down. We have a skill set, we have people whose skill set is very old. It is not for the new. For the time being, the government has to only manage by providing some more succor. We are providing by way of only this food to 80 crore people. That is not, you don't need, the skill sets need to change, the new economy kind of things need to go. We need to have export of people. Can we negotiate with rest of the world that all right, we'll open up our economy for your goods exports to us, but allow our people to go. You are facing a demographic crisis. Your people are not. Why the Americans and European growth rate is lower? Because they are democratically declining now.
Okay, so let's take the couple of questions that are left. One is price movement after the Modi government came to power. How many people feel? Remember, this is not CPI or wholesale price index. This is really just perception. So how do people perceive price movements after the government came to power? 34% say prices have gone down. 58% say prices have gone up. Now that's important. Perceptionally, 58% saying prices have actually gone up. Has inflation had an adverse impact on your life? A lot say 46%. 46. Half the sample says inflation has had a very adverse impact on their life. A little bit of an impact, say 28%. Not at all, say 26%. 26% saying not at all. 46%, which is amongst the highest we've had since this polling started, saying that inflation is having an adverse impact in people's lives.
Let me respond to that, Rahul. See, as I said earlier, that inflation did become a problem for common man on the street in last 2 years, because earlier inflation was very well controlled. But last 2 years, yes, I can understand that it has gone up, and people may have faced problem with the inflation, but now it is being contained. The target of it is coming off, and the target is for next year is 4.5%, which was the original target of RBI as well as the government. Having said that, all the three slides which you have shown, if 2-3 suggestions, if policymakers really want to take a cue from these 3 slides and really come up with some solution, then what you were asking, Mr. Rajiv Kumar, then maybe the focus should be on job creation. So rural economy should be the priority. Focus on investment in rural infrastructure. That will create a lot of job opportunities in the rural areas of the country. Secondly, I feel that out of these 3 slides, if at all we have to address this concern, maybe partly we can say that standard deduction can be
but can
increased.
people expect these kind of announcements given the fact that we're
one
heading into elections.
Everybody had a say.
No,
in
one
this.
second,
Now, let me
Dr.
speak,
Garg,
please.
can there be an expectation around standard deduction
just
given that we're
complete.
just building to elections?
I feel very...
So a standard deduction touches a very small
2%
number of
people.
people.
2%
You have already given last time
Exactly.
in 2019, 2.5 crore people were exempted. This year also there would be something. In the meantime, you've taken it to 7.5 lakh. If you raise it further, we have only 4 crore people effectively paying income tax now. If you take it further, this will go down. There is an argument for the inflation because inflation indexing we don't do, and therefore the number of people coming into the tax net also increases. So there is an argument for it, but this is not going to help a lot of people.
Okay, Supriya.
Let
Supriya speak.
I think everybody's had a say. It's only fair that I speak. What
She
are these
speaks
two-
more than everybody else and then yet says that she got to speak the less. But please.
I don't like you patronizing me,
Okay, please.
and I don't
Supriya ji,
appreciate
go
it.
on.
With all due respect,
Go on.
I don't speak more than anybody else. The two charts that showed you tell you that the Achilles heel of this government is high prices, is inflation. There are two things the government needs to do. Point number one, accept that there is a problem. Accept prices are unbearably high and there is unemployment, and that needs to be addressed. The second thing they should do without any delay is reduce fuel prices, because that is what is jacking up prices. What are people paying for? Forget about standard deduction and all that. People are paying GST on common flour. People are paying GST for hospital beds, for books, for pens, for pencils. दही के लिए GST दे रहे हैं भाई. उसको कम कीजिए. Fuel taxes को कम कीजिए. But begin with accepting that there is a problem of high prices coupled with unemployment. It's unbearable. This government wants to look the other way, and that is why these problems
Okay,
persist.
so we're running out of time. Yashwant Deshmukh, final words from you in terms of the net picture that emerges in your view when you look at all these questions and try and form one composite image or analysis on the back of it.
I think all the panelists have said it, and Supriya said the right thing, that acknowledgement, and I'm glad that the BJP spokesperson has been acknowledging on your show, at least, because many a times I also see people not really acknowledging it. And that is what probably politically boomerangs many a times, the lack of acknowledgement. But having said that, Rahul, one thing is very clear, that people have issues. Those issues, in spite and despite of those issues, there is a sense of hope. And there is a sense of hope in terms of who is going to give the solution. Somehow this government, the only thing on the economic front which is bailing out this government and this governance right now is the personal trustworthiness of the Prime Minister. That's it. Is the personal trustworthiness and the goodwill that he carries to the people and says that I will figure out a solution. And that is what people look forward to and trust that he will find a solution for that. That's the bottom line of looking into the glass half full and glass half empty analysis.
So all our guests have spoken, and I think Yashwant makes an important point in the end that if Prime Minister Modi hadn't been leading the BJP government, then some of these issues could have compounded potentially to greater anger. They look at the opposition, they look at the disarray in the India alliance, and they look at their own prospects, and maybe they come to the conclusion that they aren't that badly off. That's something that the opposition needs to reflect at. But what you've looked at is the glass both half empty, half full in terms of where things stand. Rajiv Kumar, Subhash Garg, we look forward to having you back with us early in the morning tomorrow.
Yes.
Supriya Shinde, thank you very much for joining us, as also to Zafar Islam and Yashwant Deshmukh for providing the framework for this conversation on the state of the Indian economy. This is the India Today review in terms of how people perceive the current position of the economy. Thank you for tuning in. We'll have a lot more for you starting early in the morning at 8 a.m. tomorrow. Goodbye. Good night.